Hey everyone, today let's talk about tax-free savings accounts, also known as TFSAs. These are one of my personal favorites, and I hope that this video can give you some insight on some of the benefits of this account and things that we should be aware of, because I've seen many Canadians underutilize this account to its full potential. So let's jump into things starting with the basics. What is a TFSA? It's an account that was established in 2009, allowing Canadians to invest and grow their money tax-free and also withdraw the money tax-free. However, there's a couple things we need to note. There are contribution rules and guidelines that we need to follow, just like an RRSP. And any contribution we make into this account is not tax deductible, whereas an RRSP contribution is. Now, where can I open up a TFSA? Most insurance companies, trust companies, banks, financial institutions, and credit unions can issue these TFSA accounts and open one up for you. And the eligibility to open an account, you must be a Canadian resident, must have a valid SIN number, and must be 18 years of age or older. So let's jump right in to the contribution rules and guidelines. Any contribution you make yourself will reduce your contribution room. As we can see in this table here, because this account was established in 2009, from 2009 to 2012, our contribution room was $5,000. From 2013 to 2014, it was $5,500, and in 2015, it was $10,000, and so forth. We can see the numbers on this table. And in 2025, just like 2024, our contribution room is $7,000. But here's the cool part. All the years you did not contribute or missed maximizing the contribution, that rule will carry forward for you. So let's take an example. If you were 18 in 2009 when the TFSA account was established, you could contribute up to $102,000 in 2025 if you've never made a contribution since 2009. If you turned 18 in 2022, you don't get all the contribution room from 2009 to 2022. Your contribution room will start from 2022 onwards. So in that case, let's look at the contribution room for 2022, which was $6,000. You would get that plus the 2023, 2024, and 2025 contribution room, which would give you a total of $26,500 that you could contribute. And oftentimes, because of the contribution rules and guidelines, we may accidentally overcontribute. And if we do, there are penalties associated with that. And that is 1% of tax per month on the highest excess TFSA amount in the month. And in terms of making a contribution, only that individual in which the account is named under can make the contribution. You can, however, give money to your spouse or common law partner for them to make a contribution into their own TFSA account. It's always best to double check what room you have. And you can do that by calling the CRA at this number or logging into your My CRA portal to get that information. I do want to note here, however, is that if you've been maximizing your TFSA account every year and you choose to do a withdrawal, that withdrawal room does not become available to you until the following year. Meaning, if you were to take out money in a year and contribute in the same year, you would actually be over contributing. And we can look at that in an example. So it's 2025, and let's say I've been maximizing my TFSA every year, including this year. But, in the summer, I have a trip planned, so I choose to take out $10,000. I've taken out the $10,000, and a couple months later, I choose to invest that back in. Unfortunately, I would actually be over contributing because that room hasn't become available to me yet. I would have to wait until 2026 to get that $10,000 withdrawal room back, plus the 2026 contribution room as well. Now let's actually look at some of the investments we can actually invest in within the TFSA. You can choose to leave it as cash, which is probably not the best option, or you can buy a mutual fund, security on a designated stock exchange, GICs, bonds, and certain shares of small business corporations. And here's one of the beautiful things about the TFSA. Because the withdrawals are tax-free, they don't generally impact your old age security, your guaranteed income supplement, or your employment insurance. They also don't affect your eligibility for the Canada Child Benefit or the Canada Workers Benefit, and the GST tax credit as well. A qualifying transfer is a transfer into your TFSA account that does not impact your contribution limit. And those would be one, a transfer from one TFSA account to another TFSA account that you own. Two, transfers upon a breakdown of marriage or common law partnership. Now, if you're curious and want to go into more details about how each of these impact you and your financial plan, you can always talk to your financial professional about that. And in some rare cases, there are some tax implications that you need to be aware of for this account. Generally, the account is tax-free in terms of the growth and the withdrawals, but there are some rules and stipulations that, if not followed, taxes will be applied. Because there's a lot of information regarding the tax implications, I'll include a link below if you want to look at more of the details around these rules. But to keep it simple, these are the rules as follows. Tax payable on excess TFSA amounts, tax payable on non-resident contributions, tax payable on prohibited investments, tax payable on non-qualified investments, and tax payable on an advantage. So if you've stuck around till the end, I do appreciate you as always. Thank you so much. And I hope that this video was informative and give you some insight into some of the benefits and features of the TFSA account. And if you did also like this video, I kindly ask that you hit the like and subscribe button below. I hope to make more educational videos like this in the future for you. Thanks again, and we'll see you on the next one.